the floor of the CME Group. This is Danny Riley on this Wednesday, January 20th. There's so much to talk about today. Unlike last week or last couple days when the news coming into the new year was a little bit light and the markets weren't really doing very much, it's completely changed. Over in the euro currency, it's down 200. Behind me in the crude oil, it's down $2. Gold is down over $30. This is all a big liquidation trade, ladies and gentlemen. And what that's all about is all that money that's been going into other places is now being liquidated and moved over into the bond market. You can see it you can see it so clearly. The bonds are up 26 and the S&P is down 17.20. So something definitely is being shifted around. As far as the news out there, we all know that Haiti got hit by another earthquake. We know that B of A posted a $189 million loss, and let's see what else. And we know that the Republicans took that seat in Maine. You know what? Nothing stays the same forever, and that's what we're seeing here today. Over the last almost a year, the markets have been going up off that March 9th low, and they've done nothing but power forward. The markets, during that time, the naysayers were selling the market as it went up, and they got beat up, and they've not made any money. So this down move, or the beginning of what looks to be a beginning of a down move, is really a refreshing thing for the other side of the guys that are trading. There's the buyers and the sellers haven't been making any money. But over here in the S&P pit, these guys love to sell the market. This is something where they come to work. The pit fills up when the market goes down. You know, the bottom line here is that we as a desk are unsure what to think here. We start to see some of this stuff rolling down, and generally this would mean some type of trend change. But so many times in the past year, we've seen the markets sell off one day, sell off 2 days, and then within a day or two after the sell-off, they're above those prices from where they were the prior days. So, what are we thinking here? We're thinking that maybe we're getting close to a top. And if not, 1150 could be a very, very pivotal number on the upside. And it's also a number that we've been talking about for 3 or 4 months. We had the 11 even level, we had the 1120 level, we had the 1130 to 33 level, and then we had 1150, and above that we have the 1180, 1185 level. Right now we're up against that 1150 level, and the markets aren't acting all that great. What we're going to do is we're going to have Tim come in and give us a little bit of technical side from Top Notch.
Danny brought up a couple good points that we're looking for, but since yesterday, the S&P settled at, if I believe it, let me just get my sheet out here, 4570. That has been the highest settle in this future since August of 09, when the last separation gap, so to speak, of the settle price was at 77.70. So Danny was talking about the 80 even level, and to be honest with you, if the next surge is upwards, we're going to see another move of about 30 handles or more. However, they are in a channel trend, and we're looking for 54.5, which is another point of interest. So all these things are coming into retrospect. But since last week, we've seen a triple top now in the S&Ps, and actually we had a double bottom. They've taken that double bottom out today. Is there more work on the downside? To be honest with you, they did a couple slippery little things the last day of the year when they took them all the way down and had a settle price of 10.80, and then we opened up the first day of the year and our low was 11.19.5. So to be honest with you, we could see it slip back down to about the 10 level with an objective of 11.04 even, with 10.97 even as the total objective, which would be a nice retracement and healthy for the S&P market. The NASDAQ, on the other hand, the last time this NASDAQ future settled this high was all the way back in August of 2008. That's a whole year time span, but its objective was 1929.5, which isn't that far away. 30 handles, I believe, 40 handles from the all-time high. The thing about what they've done so far is they've made the contract highs in the S&P and the NASDAQ futures on the Globex session. So that's food for thought. We've only made a high of 47 in the NASDAQ, 96 even in the, excuse me, I'm backwards, 96 even in the NASDAQ, 47 high in the S&P. The Globex contract highs are at 48 even in the SPOO, and they're at 99.75 in the NASDAQ. So if they decide to go up and further that move, I suspect that they're going to be looking for those gap separation prices of the last settles, which is once again 1177.70 in the S&P. I got it backwards today, and 1929.5 in the NASDAQ. We'll see what remains to be seen. We would like to see the SPOOs settle back above their double bottom, which is at 27.5 today. If not, then we will see further erosion. Have a good day. We'll take it one day at a time.
And then one last thing. You know what? The markets need to come back down. All these markets on the trading floor are geared into the stock market in some way. When the stock market's quiet, a lot of these other markets are quiet too. So, in other words, with 8 or 9 months of going up, we need a little bit of a washout. That will really get the markets rejuvenated again. It will give the short sellers a little bit more ammo, and it will give the buyers a little bit of a jolt that they really need. Right now, the buyers have just been taking a free ride on the upside with very little or no pullback. We say in 2010, it will not work exactly like it did in 2009. That's it from Mr. Top Step for today.